It looks so easy. And maybe it ran out of juice. There it goes. Oh. There we go. All right. Wow. I'm I I can't do a good job on everything. I'm trying to do too many things. I'm glad to be busy, but I can't seem to do a good job on any one thing. Um, yeah, it's late. It's 8 o'clock, but um, I'm going to go to New York tomorrow in the morning, specifically on this gold company that many of you were invested in. And, I've got to try to make all these meetings work with it. I'm going to stay overnight and be there Wednesday. And if need be, I'll stay one more night. But the most important person, I don't know if she's going to be available or not. I'm going to try to reach her, but we'll see. She's got a big project that's pretty exciting, that she's focused on in New York. So I'm not sure I'll get her, but I'll do my best. And I'm very excited about our gold company. The main thing I want to make sure is that we're at the table, as inevitably. I couldn't bring, I had an investor, and I don't blame the investor at all. I just think the bureaucracy involved in the whole process meant that we never were able to fund. And but that doesn't change that the gold is there. Doesn't change that the world has to be shown that there's a process to get the gold out as well. It doesn't change that need. But it's 100 million ounces of gold, which is just huge. Could be double or triple that. But even if it just starts out with 2 million ounces of gold or 5 million ounces of gold, it's a big project. So it's going to move forward. And somebody else has stepped in what I was trying to do with an investor. And they're going to, it's essentially, I think, going to be a NewCo. So we're all going to get crammed down. However, you who invested in it over the last year and a half, whenever that was, we're going to have the option to convert into that company, or get our money back. And I want to be there at the table, showing good faith, good effort, raising money, so that we have the best claim on what we can of the upside. I'll just put it in terms of myself. I probably invested somewhere between 450 grand and maybe as high as 500 and a quarter, maybe a little more than that. It scares me to think that it might be higher in the company, both direct investments and buying shares in the open market. And let's just say it was $500,000. It doesn't matter. It's over so many periods of time. And, I've had so many other losses that just focusing on the loss part of that is irrelevant. But I basically had something like 2 million shares, maybe. I haven't calculated. It might have been as much as 2.5 million shares. And if I had achieved this funding, uh, which I had every reason to believe that I was going to be able to, I think the company would have had something like 800 million to a billion shares outstanding. I probably I would have sought the best legal um, advice in the mining space, and I had been working on it a long time. Um, had an attorney. He went to Harvard, don't you know? Every time you meet him, he talks about Harvard as within 30 seconds. Um, I told him I went to Harvard. He said, "You did? Really?" I said, "Yeah, I had a girlfriend in Boston, and we we went down, got a newspaper, ordered lunch, and we sat on the lawn." And then he goes, "Oh, you're one of those." I told him I went to the Harvard of the South, and in fact, if the South hadn't lost the Civil War, who knows? But anyway, I my point is, I would have done whatever the attorneys suggested was in the best interest of the investor and the current investors. I would have been far more likely to make a deal that looked out for all constituencies. But I think in this case, it's going to be a cram down. It's going to be a new co. And the old company, my investment, my 2.5 million shares or whatever it is, all gone. It's probably somewhere between 2 and 2.5 million shares. It'll be part of a stub company. So and the guy doing it has that same situation too. But it's, the argument is you go forward with a clean company, and that's better for everyone. So the arithmetic on it, if you just take my ownership and just assume a billion shares, I would have 1% of a billion is 10 million, is it? 10% of a billion is 100 million. 10% of that is 10 million, which is 1% of a billion. So I would have in the current or the previous structure, roughly, I'd have 0.02 or 0.025 of a percent. I'd have a very de minimis ownership. But if I can work it out that we have a chance to participate here, it's possible we can pick up our percentage ownership very easily and maybe have a better ownership. It's the same project. It's just it'll be a new co. So I want to find out all about all that, but I think I'll come back with a lot of information on our company. My opinion is I see a couple of risks. Um, of course, it's always the case. Nothing is without, particularly without execution risk. But I really think it's going to move forward. I think it's going to move forward in September, and whatever third-party report, which I'll find out about, is being commissioned, I think we'll get those results very quickly, which is unusual, but that's because it's a huge project, apparently. That's what I'm being told. I'll find out. But I would imagine we'll get those results within 30 days or 45 days, which is amazing. And then I think because the pilot plan is there and largely fitted, I think they'll get going on it. I think there'll be a raise at much higher levels, and I think that'll happen in the third or fourth quarter. So I think it's going to be very exciting. I wish I were more involved in it, but this is the best I can do, and I'm going to give it my full effort. But like I say, if you've got a calculator, if one assumes 2 to 3 billion tons of sand going down and out, and you use, call it 2 billion tons, and you use I don't know, the published reports were as high as and with the SEC is the high as 0.20 ounces per ton. But I don't think we're going to have the advantage of that process right away. But obviously, that's a lot of ounces. But at 0.0, I don't know, 0.0. I'll find out these numbers, and I'll also find out if I can discuss them. But at 0.038 times 2 billion, that's 76 million ounces of gold. I mean, obviously, if you do 0.038 times 3 billion tons, and that's, you're starting to stretch. They only drill down to, in majority, they only drill down to 200 feet. They did a couple of previously down to 400, but this may go down to 1,000 feet or more. So you're pushing it. But if there's 3 billion tons of this material at 0.038 ounces of gold per ton, you've got over 100 million ounces of gold. But imagine if instead you're able to get 5 times that with the process that had already been worked out. You've got 500 million ounces of gold. Those numbers sound insane. They sound absolutely out of this world. But this is gold. It's nano gold. It's in the sand. It's refractory, which means it's got a hard coating. But that's the Carlin trend, which Barrick Gold and Newmont Mining have made their bones on over the last 50, 60 years. And so it's not a particularly unique concept, but it's pretty simple. If the process is, whether it's just the initial process, if it's commercializable, which is a horrible use of the language, all you got to do once you get gold in hand from a commercial or a pilot testing project is to take the average results and multiply it by the resource, which is sand. It's in a huge caldera. So if it's in 1 square meter of the sand, there's no reason to believe it's not in 100 square meters of the sand or in 1 billion tons of the sand. It's on a scale that's really hard to fathom. So anyway, it's exciting. It's really exciting. And I think the good news is it's moving forward despite my failure to raise money. And it looks like we'll be able to participate. So I'm excited about going up. I have to get up early in the morning. It means that I may or may not be able to go live. If I can stay an extra night there, I'll arrange to do that because I want these guys to meet my investor. But in the meantime, I'm going to introduce them to at least two other investors, maybe three. So, yeah, I think it's going to be good. But I got to tell you, I'm tired. I'm eating cherries because I have gout. I'm taking medicine. I'm doing all the running around errands that I need to do today to be able to go travel. And I'm just a little bit worn out. And then this phone communication, people are giving me a lot of heat. But I don't think people realize this iPad, I wasn't getting any messages on my iPad. I'm not getting any of the phone. Normally I get updates by going into AT&T and reporting my phone is stolen. I had no evidence that it wasn't. I mean, it was my fault. And then replacing it, which was a 5-hour process, they shut down everything. So there's no. Anyway, in this modern world, I suddenly got thrown back to where back when we had to go find a payphone or borrow somebody's phone, and so I've been a little out of touch because of that, little out of touch because I was flying, and then a little out of touch because I just didn't get that much done. I guess it was Saturday where I got conked out a bit. And then, anyway, I'm trying to do the best I can. All right. Let's, I got some feedback on my comments on the Next Trip financing. And that comes from the Frenchman, the Claude. And I find him to be a bit of a pain in the butt because he's so anal and he's so much like an attorney and he's so much like a busy French waiter that I clash with him a little bit. But I went back with the feedback that I got, and I'll play that for you. I hope it doesn't take too long. And then I went to the the Afrikaner, and I got frankly, a much more elegant, I guess, or a much simpler response that didn't have all the negatives. And so I'll show you that. I've also tried to understand what's going on with Railtown. I asked some questions on that. We can go over that. My opinion, although it's not, you cannot find it anywhere, I think that with Railtown, there's 3 or 4 things that might be going on. I think it's clear. Look, the stock was flirting with 21, 22 cents, even 20 cents just a week ago. And now, in essence, it's flirting with 30 cents. I'm probably, both sides of that, I'm exaggerating by about 2 cents. But that's the turnaround in just 1.5 trading sessions. And I think it's significant. I think Railtown has turned the corner. One thing it could be, I was checking the community messages on Yahoo. It could be that momentum players are expecting revenue. And as that builds, that expectation builds, you get hot money and you get expectation money chasing the stock up. If that's the case, they're going to be disappointed, and you will be too if you expect it in the earnings report, in my opinion. I don't I think there could be revenue, but I don't think it'll be much in the earnings report. Secondly, what it could be is that an attorney somewhere has come back from her vacation and she has actually finished a document as she lives her best life. And there's a signature out there. I think Railtown has been working all along, and maybe there's a signed document of some sort. Well, if that's the case, it has to be announced. And maybe somebody got wind of that. I'm just speculating. I have no idea. But it might be that. It could be that an institution or more than one institution have been doing their own studying, and they've clued into Hive or Cinchi or um, uh, um, even TELUS or the Canadian government. Ward has alerted me to the fact that there's a lot of Indians in the world. In fact, they make up the largest population in the world, and that there's a lot of tech there. And maybe Railtown's getting some purchase there. Who knows? But it could be an institution is buying somewhere, or a you know a family office, or it could be more than one. That could be going on. So I think that's about it. It could be momentum players, getting all hyped up. It could be that there's been a contract somewhere signed and it has to be released. And it could be that one or two institutions are buying. But to me, it's clear that something changed in the nature of the trading in Railtown. I think you could expand on number 2? I think you could expand on that, and maybe there's revenue announcements or licensing agreements that are impending to be announced, but that's kind of just an expansion on the other. So that might be what's going on. There's just no new information. I don't really expect any unless they have to announce a contract or a licensing agreement. But I think the momentum is in our favor now, looking at the stock price. Nothing goes straight up, but I'm kind of just tired right now. But don't take that to mean that I'm not excited that we might finally be getting the breakthrough that we're looking for in Railtown. It'll take weeks or months. I'm not saying this is a day trade, and I hope none of you see it that way. Okay, on Next Trip, I did talk to the company, and I am going to have an interview probably Wednesday afternoon, but it might be Thursday afternoon, late, with Bill Kirby and Richard Marshall. I think it'll be both, or maybe it'll just be Bill Kirby. Either way, Bill's going to run the discussion most of all. And we'll have a chance to go over some of these questions. They wanted to do it, sort of now, but I was dilatory in getting back to them, and they needed more notice. I'll try to get an interview with Corey. I think the odds of that are very low right now because it seems like they have material information pending. I'll try to get an interview with Total Metals, but that guy, I don't know. I must have pissed him off or something. He's not available. But I'll try again. I'll try again. And then yeah. So let's go. Let's go to make some progress on the Lynn note. But first, let's talk about some stock charts as I eat my cherries for my gout. What's this one? This is Next Trip. It's I mean, I don't see a bullish pattern there other than if you can draw the wedge, which I can see there. I can see a pretty significant wedge, but it's really me wanting to see a wedge. It's not, it doesn't stand out as obvious, but this is what the machines do to these stock prices. I think if Next Trip has meaningful news, and by that I mean specifics, this can change very quickly. Very quickly. And obviously the moving averages are targets. But if I had to pick a target of where it would be going, if it suddenly went up, I would say $2. Well, maybe that $1.80 first, but I'd say $2 to $2.20, and then I would say $2.60, and then I would say $3. So it could have a very nice move with meaningful narrative changing news. What's this one? This is Finger Motion. Well, Finger Motion had a bit of a bounce on news, and it gave what, 2 weeks opportunity to get out. But probably very few people saw that, even though I suggested that it was great as a chance to get out. Very few people probably saw 30 cents. As all that attractive. But when a stock goes from under 20 cents to 30 cents, it's a nice move. Well, here it is back down to 20 cents, and the bid's 15 cents. I don't see anything at all there that's exciting, but I would imagine they're trying to do something. This is Railtown USA, and you can see here that it's broken out very nicely. It had a bit of a pennant, and then it broke out of the 15-day or whatever that is, 20-day, the small day moving average, and then the 50-day moving average, and it's coming up to the 200-day moving average. And that's where the computers are ready to try to make things stop. But here I would sort of, I just fat finger way, I would say it's probably going to 32 cents. And I don't see any reason why it's going to stop there per se. But I don't think it's going to be straight up. Don't get me wrong. But somewhere between 32 cents and maybe 34 cents is probably the next target in the United States. And here it is up in Canada. Similar vertical move. And if I had to pick a price range in Canada, 42 cents to 45 cents would be my guess of the next sort of target that before it pulls back a little bit. But this thing is giving all sorts of indications of movement. And I forgot to show you on the US one. I think that's this one. I think it is. It's not coming up. Yeah, what I forgot to show you here is the volume. The volume's good. It's not great. I think you want to see one of these days where it's 1 million shares for Railtown. But that's significant volume here. I think there's an order inside of the trading that we're seeing. What's this one? This is last week's number, and take that down. All right, I mean, oh gosh. Oh gosh. All right, well, we'll just plow through. It's more than I thought it would be, but we'll plow through it. So I'm a little nervous about putting this one up. Let me just look. Oh, Lord, my God. I sit in awe, some wonder. I can't put it up because it's got the guy's phone number. But a very good guy, the CFO at NextTrip, wrote to Richard Marshall. And he said, Richard, this is wrong. In other words, the interpretation I was giving earlier of the NextTrip note is wrong. The 5-day and 1/3 option has nothing to do with the monthly payments. And I think that's right. And I think, as you will see, that's an area of confusion that I thought I was reading correctly. But I think he's absolutely right. They're two different things. So the 1/3 option only applies if the company is trying to prepay its entire note. But the distinction is there's one other level of choice. The company can elect monthly to repay their monthly amount in stock. And you would ask, well, why? I would ask, why would they ever do that? Well, if they run out of money, they would do it. So I think the CFO and myself, we would both assume the company would never choose that option. But you have to acknowledge they might have to. Monthly installments are governed by Section 1.3, which is true. We went over that. And the election is entirely NextTrip's. That's true. They can choose to give it in cash or shares or a combination. But it says here repayment shares are based on the 388 pricing. That is where it's not clear. If Lind chooses, it's 388. But if the company chooses to pay in monthly in shares, it goes to this VWAP formula. But in fairness to the CFO, because I agree with him and I assumed it myself, I don't think the company has any intention of issuing shares on any given month. So Lind has no right to convert an installment when you've elected to pay cash on the monthly. And I think he's 100% right. I think I believe I got confused. I might have misstated it. I kind of think the Frenchman here was saying that, but it could also be just that I got confused. So I think the CFO is 100% correct that if Next Trip chooses, his name is Frank, he's a good guy. If Next Trip chooses to pay in cash, Lind has absolutely no option to pay, ask for a third of it in shares. That option is when they try to pay off the whole note, prepay the whole note. That's when that happens. But I think where the confusion comes in, and the Frenchman here is he's always sees things from the most Eeyore way. It's like he's an anal retentive attorney, but he is seeing it in the baldest form that Next Trip took this money because they have no money. Therefore, there's no way for Next Trip to make the payments every month. Therefore, Next Trip is going to choose to convert into shares. At that point, it's not so much that Lind has a right to do anything. It's at that point the repayment formula isn't at 388. It's at the average of the lowest 5 days VWAP at a 90% discount. And I think that's where I was getting confused. I also think it's just because in my mind, I completely blocked out that the company is ever going to do that. And I think Frank would agree with me. The company has absolutely no intention of ever converting their monthly payments into shares. Never. So, but we'll find out in the interview how they think about that. So anyway, I'm not going to put that up because it has his phone number and I don't have permission, but I gave that answer to the Frenchman and he said, well, let me, I see that you, a clever person, might be able to get the phone number. So let's skip that one altogether for now. The first one admitted what I just admitted, that he was right about section 1.3, and it says that we were right too. This one says he's right about section 1.42, and so are we. If the maker elects to prepay the note pursuant to this section 1.4, the holder shall have the right, upon written notice within 5 days, to convert up to 1/3 of the principal amount. This is to prepay the note. It's not the monthly. So the trigger is the prepayment notice. It has nothing to do with monthly installments. And I think I got confused and I was wrong. I thought I was staying true to what I was reading, but in any event, I incorrectly analyzed that. And so the Frenchman here is saying that is exactly how I described it every time it came up. I called it the prepayment toll and the toll gate on the par exit. Always in the context of Next Trip electing to retire the whole note. I also told you directly when you asked whether Lynn could convert alongside each monthly payment and cascade, that it's not a cascade in an ordinary sense. 14 cash payments retire the note with 0 shares issued under it. But there are 3 conditions. So on this point, we are aligned actually, and he's correct. He's correct. But there's 3. Frank is wrong about the 388. I'm not sure he is. Remember, this is this pain in the butt Frenchman here. So they can choose cash at 104% of the installment, repayment shares based on the 388 pricing, or a combination. That's what I just read to you. But what Section 1.3 says verbatim, provided that the number of repayment shares shall be determined by dividing the principal amount being paid in shares of common stock by the repayment share price. And then you look up Section 12.8, repayment share price means 90% of the average of the 5 lowest daily VWAPs during the 20 trading days prior to the payment date. So repayment shares are not priced at 388. 388 is the conversion price. It governs what Lind Partners can voluntarily convert under 3.1 and nothing else. It does not price repayment shares. So the difference isn't academic. And I think this is where I got confused. On a $328,000, 571 installment, if it's Frank's number, it's 85,000 shares. The actual price today would be around 285,000 shares. But here's the thing the Frenchman's making. The Frenchman's assuming that the company won't have the cash, and the company will elect, Next Trip will elect, we want to pay in shares. I assumed the company never would do that. So I didn't read this that way. And that was my mistake. And I think Frank would absolutely state that he does not, and I can't speak for him, but I think he would state that the company has no intention of ever converting a monthly installment to shares and ever bringing this definition of repayment share even into the conversation. So I think the Frenchman here is correct, but I think he's he never sees anything with an optimistic eye ever. So he also says that quick note leaves out silence defaults to shares. Well, they'll make they won't go silent. And then Lynn can enlarge 2 payments on 1 day's notice to 750,000. Such payment to be due and payable by the maker within 1 day of the receipt of such notice in cash at 1.04x. That's $780,000 on a day's notice. And then, of course, in default, the whole election disappears and the default gets murderous. But we've gone through that before. Let's not go through it again. So Lind has no right to convert an installment you've elected to pay in cash. Is true. It's absolutely true. So one clarification they suggest I ask about is Section 1.3 provides that the number of repayment shares is determined by dividing the principal in stock by the repayment share price, which in Section 12.8 it as 90% of the average of the 5 lowest daily VWAPs over the prior 20 days, not 388. And I think the difference here is Frank never envisions this happening, nor do I. And so Claude here, the Frenchman, can only see this as the only answer. So I said, I was told that it's only one payment that can be enlarged. And here's his answer. Okay, I went 3 up. I don't know why this one's. I don't know why that one's off track. So I'm going to skip it. So Frank is wrong about the 388. I don't think he's intentionally wrong. I really think it's the presumptions are different, and so I don't think he's wrong. He just doesn't feel we're ever going to pay monthly by shares. So we already went over that. Okay, so they said that only one payment can be enlarged. It is confusing, mostly because 2 different clauses both produce shares and the note never puts them side by side. So let me separate them. On your third question, can they convert a third of the principal on a monthly payment? And the answer is no. And I think that's what Frank was trying to get across. So Lind cannot convert monthly payments. Lind cannot convert 1/3 of principal in connection with a monthly payment. That right exists only if NextTrip delivers a prepayment notice to retire the entire note. Frank is right on this, and so were we. Well, I'm not sure I was. It is a takeout toll, not a monthly feature. Repayment shares versus monthly payments. It's the same thing, not different things. This is where the confusion is coming from. Repayment shares are a monthly payment. Section 1.3 gives the maker, that's NextTrip, 3 ways to make each of the 14 installments. One is cash at 1.04 cents on the dollar. 2 is repayment shares, which is stock, or 3, a combination. But the election is up to NextTrip. And I think where I was making my mental mistake is I just assumed they'd never do it. So it never entered in to my thinking that that's what the Frenchman was even talking about. The number of repayment shares is determined by dividing the principal amount, again, by the shares of common stock determined by the repayment share price, which is 90% VWAP. So the 388 conversion price is Lind's voluntary conversion at any time. And Is it live? No, it's not live. It's out of the money. The repayment share price is this VWAP, but it's the company's, it's NextTrip's stock election on a monthly installment. It is live, but NextTrip's not going to do it. It's their choice. They're not going to do it. And then on prepayment, Lind does have a right to get a third of their prepayment in stock, which I would imagine they'll do. And on this enlargement question that I have, I was told that it can only be done once by Lind. That Lind has the right only once to increase the monthly payment to $780,000. But the Frenchman says it's two. And he says on this, they may be right. And it depends on how you read one sentence. This is section 1.3 verbatim, quote, between payment dates, the holder, that's Lind, may increase the repayment amount to up to $750,000 by providing written notice to the maker, that's NextTrip, of the amount of such increase, such payment to be due and payable by the maker within 1 day of receipt of such notice for two monthly payments while the note is outstanding. So, quote, for 2 monthly payments, unquote, most naturally reads as, this right may be exercised with respect to 2 of the 14 installments over the life of the note. But if they're saying it's one, maybe figure out what that wording is. It's a fair disagreement about an ambiguous sentence. It's not an error. It could be that the way this is written is the intent is to consolidate 2 monthly payments into $750,000. And maybe it could be like our Second Amendment. Maybe it could have been written with a little more clarity. The 1 day window is tough because then you're in default. So we know these things. The election is entirely ours is true in section 1.3, but it's only true for as long as no event of default exists. Section 2.1 at a $2.5 million market cap, which is roughly 83 cents a share, is an event of default. So I have a scary feeling that that's what the machines want to do. Look, it's not just Lind. This guy disagrees with me, but it's the Toad, it's the Anson funds, it's the funds in Toronto that pile on. They make their living this way. This is all they do. The clean summary, Lind's 3.88 conversion right is real, but it's dead at $1.40. Lind's 1/3 right is real, but it's only on the full prepayment, not on monthly amounts. The company's monthly election is real, and it belongs to the company. And it's the best thing the council won in this note compared to anybody else's. But here's the rub. If the company needs to elect the stock payment method, it's not paid at $3.88. it's paid at 90% of the lows. So it's a son of a gun. This is an important sentence. 14 cash payments cost about 4.78 million, and they issue 0 shares under the note. So if they make 14 cash payments, they're paying back 4.8 million, and they issue 0 shares under the note. 14 cash payments cost about 4.8 million, and the company will issue 0 shares under the note. That path exists, and Frank is correct that that is their choice. I don't know that he's wrong. I think Frank, like myself, just assumes the company has no intention of ever converting in, making a payment in stock. All right, so what task? We've already beaten that to death. So I asked them to be clear. And no, Lynn does not have that option each month. So just to hammer it home, and I'm hammering it home because it was obviously my mistake, not the Frenchman. It was mine. So I want to hammer it home. The repayment share price is the company's pricing when the company elects to pay an installment in the stock. It's NextTrip's pricing. It's not a conversion right that Lynn Partners can exercise. And that's not only a huge difference from the impression I left this morning, it is a major win for the company. It's huge. In other words, if the company makes the cash payments and they don't have any defaults, they're not going to issue stock. So the 388 is always available to Lind, but at $1.40, it's way out of the money. But it implies in reverse chronological order, so it applies, I guess, to the back end of the schedule. I'm not greedy enough to figure out why Jeff Easton makes more money doing that, but I think that greedy son of a gun has it all figured out. And then 1.3, the enlargement to 750,000 on 1 day's notice for 2 monthly payments. That's ambiguous. So is it a one-off or does it happen 2 times? I think it'd be worth a clarification before Lynn Partners puts them in default, because Lynn Partners you cannot trust, in my judgment. In an event of default, it goes to 85% of the lowest 3 volume weighted average prices. So they don't want to get into an event of default. The monthly election belongs to the company, and Lind cannot convert an installment. NextTrip elects to pay in cash. I'm not sure he's wrong. But anyway, it says here he's wrong that repayment shares priced at 388. I'm not sure it's what he was talking about, because I don't think they're even intending to do it. He's right about who holds the election, that's exactly right. The trap isn't Lind converting. The trap is the company running out of cash and having to elect shares, or missing a notice deadline, which in that case makes the installment shares by default. Um, no deferral right exists. I was told there is one, but this Frenchman went over the documents. There is no clause permitting Next Trip to postpone, skip, or roll an installment. I'm not sure that's correct, but that's what it says here. So that'll be something I try to find out. I don't think it's a major thing in the scheme, but it'd be nice to know the difference. It would be nice to know the difference. We already went over that, so luckily we don't have to read it again. We already went over that. We don't have to read it again. We already ran into that, and we don't have to read it again. We already went over that. No deferral right exists. There is no clause permitting Next Trip to postpone, skip, or roll an installment. Well, it must be there somewhere. It's not in these documents, but it must be in some. So it says here the November payment cannot be moved. Well, I'm told it can be, but somehow it's missing. So the first payment is roughly November 18th. And the prepayment gate under section 141 opens on the earlier of the S3 effectiveness or unrestricted Rule 144 resale. That's not going to happen in that time frame. The S3 was filed August 19, and it must be effective by roughly October 19th. There is a window, call it late October to mid-November, where prepayment is available and no installment has yet come due. Personally, that's what I think they should do. Just prepay the whole thing. But hey, I'm a little bit chicken. But prepaying before November doesn't avoid anything the schedule imposes. So the prepayment is 4.6 million flat, whether you pay in October or after 4 installments. Paying early doesn't reduce the number. It just retires the note sooner and stops the clock on the covenants. Section 1.4.2 is not optional in practice. On delivery of the prepayment notice, Lind Partners has 5 business days to convert up to 1/3 of the principal, about $1.5 million, at the lesser of the repayment share price or 388. That's about 1.33 million shares. Or about 9% of the company. And I think there's a risk that happens, but it doesn't really change what the stock could be worth. That's not the end of the world. But I think it's possible that it happens. because Lind will take that every time. Converting at a discount to market beats accepting the same dollars at par. There is no price at which declining this option is rational. So a prepayment today looks like 3 million in cash plus about 1.3 million shares. And the $1 million warrant remains outstanding, unless Lind waives it in writing. But I don't see that happening. And this is the point of the Frenchman. The money has to come from somewhere. There is an exemption for 4 million of non-convertible debt that's fixed and obviously doesn't convert at better than 388. There at common equity, there's an exemption up to 4 million with no price adjustments on equity or dividend or interest, and it's not redeemed. So in other words, common without any warrants or any other bells and whistles, just plain vanilla. Up to 4 million is exempt. So there's 8 million that they can raise without triggering anything. So you could prepay now at 4.6 million cash, or you pay at $3 million with 1.33 million shares without a waiver. Or you pay 14 installments in cash spread over 14 months, 0 shares under the note. But it means that for 14 months, you have to make sure you don't trip section 2.1 at 83 cents. You don't trip a $100,000 judgment, and you don't have a cross default over 500,000, and you don't miss an election notice. In other words, you can't have any events of default. The instinct to get out before the schedule starts is sound. That's my point. And so I pressed it on whether or not there's a clause saying that the company can delay a payment one time. And it's not apparently in the documents that are available or that I located. So it's got to be in another document. I don't think they're making it up. Next Trip insists the election is theirs. They're right, and we agree. Frank said Lind has no right to convert an installment that you've elected to pay in cash, and it's correct. He's right. But if Lind is asserting that right, it's wrong, and I don't think they are. I think it's a mistake I made. And then I asked, what if they suddenly started getting revenue? And the answer is yes, it changes things. And it's the only thing that does change everything. Operating cash is the single source of funds that triggers nothing. It's not swept under the purchase agreement. It's not a ratchet under Section 3.4. It's not indebtedness. It is the FAR Bank answer, and there is not another answer. So what it would fix, it would fund, revenues would fund the 4.8 million in cash payments or the 4.6 million prepayment without issuing a share. And it would help support a market cap above 12.5 million. So revenue is very important. And it would, in all likelihood, get rid of the going concern paragraph. And it makes pricing of the equity irrelevant because you don't need the equity. But of course, being a Frenchman, he wants to see three things before he believes it. Is it revenue or gross bookings? NextTrip is a travel booking business. That's true. That's part of what they do, but they also sell advertisements. Gross bookings and net revenue can differ by an order of magnitude depending on agency versus principal treatment. Revenue or free cash. Lynn gets paid in cash, not revenue, obviously. So 14 payments is $342 a month. You need a free cash flow every month on top of operating burn. A travel business scaling revenue typically consumes working capital before it produces it. Well, this is missing something. NextTrip is set up for a massive, really a massive income and revenue from selling advertisements. And this Frenchman is missing it altogether. Payables. Section in the note 12.2E makes trade payables over 100,000 and more than 90 days past due into contractual indebtedness, which then feeds section 5.9, no indebtedness without consent. And then section 2.1I, the cross default over 500,000, and sections 5.8 subordination regime all come into play. A company growing quickly into a payables balance can trip covenants while its revenue line looks great. Okay, what is this with all the negative vibes? So we have to look at the next quarterly for our information. Revenue does not retire the covenants. 14 months of exposure to a $12.5 million market cap tripwire, exposure to a $100,000 judgment threshold, exposure to a $500,000 cross default, and exposure to a change of control clause which fires on negotiation. Those possible defaults run until the note is gone. So that is the argument for prepaying the note rather than amortizing it. Which is why October's 10Q will be important. I asked if I could find this executed version. They said no. So I'm trying to find if there's a side letter that gives the company that 1 month deferral. I can't find it. I read as much as I could stand. I let the computer read the rest of it. I didn't find it. Side letter, disclosure letter. I could always ask Frank, I guess. I don't. I don't think it's a big deal. Um, so where does the 4.6 come from? He asks. Um, you can raise 4 million of common or preferred if it has no price adjustment, no dividend, no interest, et cetera, and you can raise 4 million of non-convertible debt. So they are allowed to raise $8 million exempt. And they can do it at a lower price, exempt. This is a good clause, section 4.1. A prohibited transaction is permitted without consent if the note, quote, is repaid in full directly with the proceeds of such prohibited transaction and concurrently with the closing thereof. That's a pretty good thing. I'm skipping the ETF because I don't know if one exists. So by paying it off early, you get rid of all these covenants. So prepayment of the 4.6 million, whether they do it in October or after a few installments, what you get from prepaying it is you take all the risk of these defaults. Section 2.1, the 12.5 million market cap event of default, 83 cents per share. The 2.1 section, $100,000 judgment. The 2.1I, cross default on other debt over 500,000. And the Monaco Investment Partners is a $3 million line. I don't know if there's a cross default going on there. 2.1, change of control that fires on negotiating or proposing a change in control. Section 5.9 and the prohibited transaction ban. I assume they'll stay away from that. They have section 4.1, the debtor in possession financing, right of first refusal. I don't think they're going to be in bankruptcy. 5.2, the reverse split covenant at $5, 5 times NASDAQ's requirement. That would certainly give their friends at Anson Funds plenty of stock to sell downward. Section 7.2, Lynn's self-triggering investigation right. So it's all these annoying things that can bite you. So why not just pay the bloody thing off? So you need to get effectiveness of the S3. That'll be around October 19th. So they can't do anything apparently until then anyway, which is fine. I think there's going to be a lot of good news between now and then. If there is a prepayment notice, Lynn does have 5 business days to convert up to 1/3 of the principal at the lesser of the repayment share price, or 388. With the stock trading where it is now, that repayment share price would be around $1.15. It'd be about 9% of the company, 1.33 million shares. So Lynn takes that every time. converting at a discount to market strictly dominates taking the same dollars at par. So without a waiver, the clean exit is 3 million in cash plus 1.3 million shares. If you get a waiver, you just get out for cash. I doubt they will negotiate that waiver, but who knows? Maybe they will. Somebody could buy the note. I hope they don't. So the sequence to go through, is there an ATM? They should negotiate a waiver with Lind. Obviously, that's not likely. The S3 is effective on October 19th, approximately. Then the gate opens. And if the waiver is signed, then you deliver the prepayment. Anyway, it's all probably going to take care of itself. I asked, don't they have cure periods? And 4 of them do. There's a 5-day cure period on payment default or liquidated damages. There's a 3 business day cure on failure to pay fees or liquidated damages. There's a 5 business day cure for default in any material covenant not covered elsewhere. And there's 45 days to dismiss an involuntary bankruptcy proceeding. But everything else, there's no cure, no grace period, no notice, and no cure. The big one is market cap below 12.5 million. And let's not read them through, but we've read them before. There they are. I'll leave that up for, there's a dozen triggers with no cure at all. So I think there's a lot of incentive to just buy this note back. The mandatory default amount is earned on occurrence, not on expiry of a cure. Section 2.1S has no cure by design. The 10 consecutive trading days requirement is the buffer. Once the 10th day closes below 83 cents approximately, the default has occurred and there's nothing to cure. This is the single most dangerous clause in the instrument for a 14-month hold, and it's the one with no safety valve. But remember, if they start having a lot of revenues, there's no way the stock, well, in almost all cases, the stock won't be down in the $12 million market cap. And the company has to report their default to Lind Partners within 1 business day of any event of default. And they've got to highlight it. They got a tattletale on themselves. Fingers Note might have had more um, cure phrasing than this one did. You the question is not really whether they can write 14 checks. It's whether they can go 14 months without touching any of a dozen uncurable tripwires. Some are within management's control. File on time, keep shares reserves, don't announce a merger negotiation. Some are not. A judgment over 100,000, a cross default on the $3 million Monaco line, and above all, a stock price at 83 cents approximately for 10 sessions, while a registered 3.4 million share resale block sits ready to sell. By the way, they already sell. That is all the argument for retiring the note rather than amortizing it. And it doesn't depend on revenue at all. Revenue helps them pay. It does not shorten the exposure to all these clauses. I asked how quickly does the principal pay down? If you multiply it by 14, that is the full $4.6 million principal, retired at 7.14% each month. So each cash payment reduces the outstanding principal by 328,000 and a half. So total cash out over 14 months is 4.8 million, paying off 4.6 million approximately. So the first payment will be around November 18th. It's 7.1%. Second payment 14.3 cumulative, and so on. So here's the, if they do 14 months, that's their schedule. The exposure to the defaults does not shrink with the balance. It's a market cap test in the one case. So paying down principal does nothing in terms of covenant relief until the note is actually gone. The one thing that does go down is Lynn's 1/3 right of outstanding principal. So if you pay for a few months and then prepay, their conversion rate goes down. So that might be a reason to do that. And it might be why they would sign a waiver so that you would agree to pay cash now instead of over 14 months. You never know. Basically, I asked if hedge funds could help Lynn drive the stock price down. If there's a default, Lynn gets 120% of the outstanding principal, and they also get 85% of the average of the three lowest VWAPs. It's all a nightmare. It's all a nightmare. This is what someone decided to do with their life. So they could get a third of the company in default. So the payoff from a default is large, and the direction is unambiguous. So hopefully there's no defaults. I would just buy out of this to get rid of the risk. That's what I would do. We already talked about the cure periods. This is the payment schedule. That's the payment schedule. We talked about the exposure not shrinking. That, you know, the default risk doesn't go away. And we are now done with that. It was just all the same thing. These are the triggers that Lind could influence or its buddies. The $12.5 million market cap, the failure to timely deliver shares, because it's at a transfer agent that maybe Nextrip doesn't have any control over. Insufficient authorized and reserve shares. I don't know how. I think the company could stay ahead of that. Registration mechanics and the investigation right. If, in Lynn's reasonable opinion, an event of default has occurred or is or may be continuing, Lynn may open an investigation and Nextrip must pay the costs. That is a self-trigger on Lynn's part. I would get out of this thing. Have I said that? How often have I said that? The Nextrip can control maybe very little of this. Lind can't cause $100,000 judgment. But then again, I'm not sure Next Trip has any control over it. Or a cross default, a bankruptcy, SEC filing failures, change of control. And then, of course, they always mention that Lynn says no short sales as if their friends are not doing it. Selling long is allowed. Selling shares Lynn, quote, is entitled to receive, but has not yet received. That's illegal, but they put it in there. In many cases, it's illegal. Against a pending conversion, repayment, share payment, or warrants exercise. That's shorting. Pre-selling into the pipeline is permitted. Not legally. The prohibition is on a net short position, not on selling into weakness. It does not bind unaffiliated third parties. So any shorting before July 21 isn't covered. Of course not. The documents permit substantial selling. And don't fool yourself. There's a lot of shorting going on. So there's no leg of Lynn's position that requires the stock to appreciate to make money. Lynn doesn't care if the stock goes up. It doesn't need it to go up. Lynn benefits from a decline, and Lynn holds the ability to sell registered stock into the market. That is misalignment, and it's documented. And then they go into the FINRA numbers, which are all crap. The instrument pays the lender more. The lender is Lynn Partners. The note pays Lynn Partners more as the borrower's stock falls, and it pays the most on default. Next Trip's exit requires 14 consecutive months without touching a tripwire, and 12 of those tripwires have no cure period, while there's a lot of stock sitting ready to sell. So I brought up the 4 hedge funds that Ham said that Lynn is apparently working with. I don't have proof of it, but that's my source of information, and it's a long time ago. I believe it. And it says, can it be walked down to 83 cents a share? Yes. It's got a going concern paragraph. A 41% decline is not a particularly large move in this space. And once it does stay under there for 10 days, there's no cure. Well, one, I'm not sure that's going to happen. And two, if the company has the resources to pay it off, maybe it's just a matter of a lot of stock getting issued, but the company survives. Can deep pockets rescue it? Buying stock raises the price, but does nothing with the covenant once it's stripped. Okay. But, so in other words, money can't come raise the price after those 10 days. But They could prepay the note before it happens after October 19th. They could buy the note from Lind. I hope not. And they could issue shares in the exempt lane up to $4 million. After default, the 90% doesn't even apply anymore. It goes to 85% of the average of 3 lowest VWAPs, not 5. And on an uncured default, Lind, quote, shall have no obligation to accept the repayment of the note by the company's issuance of repayment shares. Lind chooses stock at 85% of the lows or refuses stock and demands cash. So at 83 cents, you've got 5.52 million mandatory default. It's 8.1 million shares, but the cap is 3 million shares. So it converts it into a cash demand the company can't meet. I don't think that's true. I think the company will have cash. And then it says it doesn't know about the 4 hedge funds. So here's the FAR bank test. Documented consequences from filed exhibits. A lender whose every payoff leg profits from the decline of shares, and that's fully documented. A short sale covenant that prohibits only a net short position and expressly permits selling long and pre-selling into pending conversions. A covenant that binds Lind and entities it manages or controls, but nobody else. It doesn't bind anybody else. There's 3.4 million shares registered, ready for resale at effectiveness. And there's an uncurable trigger 40% lower than today's price. Have I suggested they should just buy this back? Okay, I don't want to argue. He just won't accept that short selling exists. So I said, is it a race? The dates that matter. October 19th matters. The S3 must be effective. This is the gate. Until it opens, the note cannot be prepaid. So can't do anything, just enjoy our life until October 20th. October 20th is the 20-day measurement window for the first payment date. So it's the point from which they calculate the lowest VWAP, and they'll be selling stock if they intend. If they see trouble, if they see the company's in trouble. All right, let me see where I am. Now I'm lost. Darn it. Darn it, darn it, darn it. I'll just go with what this is. If I'm lost, I'm lost. So it's the 19th, that's the gate. The 20th opens the VWAP schedule. Mid-October is the 10Q. November 18th, the first installment is due. But I don't think the company's going to pay in shares, so I don't think this VWAP is going to matter. The window to repay is October 19th to November 18th, approximately. The company is racing to have $4.6 million ready the moment the gate opens, and they might, because every day after that is the risk of a trigger in one of the defaults. But I don't know. The company may actually do some thinking, whereas I'm not sure AI does. They need the waiver, and Lynn's not going to give a waiver. I'm just going to skip that because Lynn's not going to give a waiver, I don't think. So if the quarterly shows real cash generation, then the picture changes materially. And that's what I think is going to happen. Then prepayment becomes fundable without a discounted raise, or the 14-month path becomes credible on its own. And if it shows bookings without crash, that's different. But remember, NextTrip is going to make the majority of its revenue selling advertising. And you're going to hear about that, I think, very quickly. So there's two different clauses. I say that, oh no. I guess Claude's actually saying he might have made a mistake. He may have blurred them by discussing them at the same time. So the monthly installments are at the maker's option. That's NextTrip each month. There is no 5-day Lind right attached to a monthly repayment. There is no 5-day Lind right attached to a monthly payment. There is no 5-day Lind right attached to a monthly payment. None. Lind cannot convert an installment. NextTrip elects to pay in cash. Frank is correct on this. But the prepayment toll is when the company decides to prepay. Then they have 5 days. So both clauses use the same price, the repayment share price, which is 90% of the average of the lowest 5 daily VWAPs over the last 20 trading days. And that is why it's confusing. But on the monthly payment, it's up to NextTrip to do that. They're not going to do that. They're not going to repay in shares. In the prepayment notice, it's up to Lind Partners. And they very likely will take a third of the outstanding principal in shares. So I think at the end of the day, it's quite likely that there will be shares issued. I just don't think there'll be very much. It'll be 1 million for the warrants and maybe 1 million, 1.5 million at this conversion. I asked if the note should be bought out before mid-November. My answer was yes, but it's not clean. If NextTrip simply pays 14 cash payments and never delivers a payment notice, then they never activate the issuance of shares. So maybe that's their game plan, is just to pay the 14 monthly payments. And that makes sense when you put it that way. Then you don't ever issue shares. So they have to give advance notice in writing of the election. Guess what? At least 20 days before the first payment date, and then within 3 business days of each prior payment date. So that gives, if they elected to issue stock, if NextStrip said we're going to pay in stock, that would give Lind Partners 20 days to punish the stock by selling stock they haven't yet received. I don't know. It's just so disgusting. Number one, these documents are so complicated. Number two, they're all to bury shareholders. Although I think there's meaningful protections here, I don't know why they're allowed. Donald Trump should write one thing: only stock, plain vanilla stock, plain vanilla debt, plain vanilla convertible notes, nothing else. But he's too busy bombing every country that's around Israel. So who decides how each monthly payment is made? NextStrip, every month, cash, shares, or mix. Lind has absolutely no say. If NextStrip picks shares, how many shares? Well, that's the rub. And they're not going to pick shares. If the company fails to give notice on time, 20 days before the first payment date, 3 business days after each one thereafter, such monthly payments shall be made in repayment shares. So it better be marked on their calendar. Lind cannot convert a monthly installment. True. The monthly election belongs to NextStrip. True. If NextStrip elects shares, they price at 90% of the lows. True. And Frank said 388. But look, I'm not going to blame Frank. It's confusing. It is confusing. And I've already told you, I think it's because both Frank and myself and I don't think the company intends to convert into shares. And I admitted it here. I said, I just assumed NextStrip would never pick shares. It's my misunderstanding. And it says it's the right instinct. And it's where the analysis gets interesting. But to never issue shares means the company has to have cash. $342,000 a month for 14 months. And 2 bump payments of $780,000 twice, according to this analysis. I'm told it's only once. and they have to give notice on time. The moment cash gets tight is precisely the moment the stock is the weakest, which is precisely when the repayment share price is the lowest and shares cost more. The option flips from unattractive to unavoidable at the worst possible price. And that's not by accident. That's on purpose by the greedy mofos at Lynn Partners. And make no mistake about it. They're both greedy and mofos. So the press release matters because you don't want to default. If the cash path is safe, amortizing is fine. But it isn't safe because it depends on 14 months of liquidity. Retiring the note ends both exposures at once. The press release says it allows the company to repay principal and interest entirely in cash without requiring share issuances. It's true that that is an option, but it omits that the option requires 4.8 million the company doesn't currently have, and that the alternative is not priced at 388. I think your instinct that they'd never choose shares is exactly the impression that sentence was built to create. The gap between the impression and the mechanics is the story. I think they believe they're going to have the revenues. All right, so the next story is going to be about Railtown. So let me go answer some of your questions. It's 10 o'clock. I've got to go to bed and get up early. Harbison. Happy Green Day, William. Exactly, Harbison. Did Ward Richardson have any more details on the RT News, William? Yeah, but he told me not to tell you. Fast Eddie, hello there. June. Good evening, William. Good seeing you here. How have you been? Well, I've been, and I'm not yet a has-been, but thank you. Good to see you here, June. Giuseppe, good evening, William, the hardest working man in D.C. I doubt that, but I am trying to do, this job, not cutting corners. Ward Richardson, Harbison, yes, I have some good news on Cinchi. I talked about their primary partnership with Cinchi, and that's Gong. So I looked into Gong primary partnership, and that's Apollo IO. So it's Cinchi with Railtown, and that's Gong. And Gong's partnership with Apollo, Ward Richardson, they have exposure to 240 million business professionals across every industry and job function imaginable, with 60 million company profiles in their pipeline. Wow, that's a lot. Ward Richardson. Apollo IO announced its partnership with Salesforce for the new agentic prospecting experience on October of 25, almost a year ago. Ward Richardson. The partnership was unveiled during Salesforce's premier tech event last October, detailing how Apollo IO database would natively power the next generation of automation sales cloud agent rollout. Ward Richardson. Salesforce launched Agentforce in 24. It turns out that launch was stalling. They spent most of 25 to correct the bottleneck, then relaunched in October 25 with Agentforce 360. It stalled again in July, Ward Richardson, in July of 26. Cinchi, Railtown, Gong, Apollo IO are in the process of addressing this bottleneck now. Wow, that does sound big, actually. Jack Hamilton, safe travels to New York, sir. And on your title of the show, yes, we all miss Lucky. I know, I miss Lucky a lot. I miss him a lot. I see other dogs, and other dogs will give me attention for, 1 minute, 2 minutes, maybe 5 minutes, and then they go to the owner. That guy always was with me. And he'd give other people attention, and I let him. But he always was with me. He taught me a lot about life. But I think he missed it when, anyway, let's not talk about negatives. Justin, maybe Martin Shen knew he was going to be let go, and as a retribution took this Tocket finance. I doubt it's possible, but I'm not sure Martin ran Finger Motion. I think the big investors out of China or Singapore or Hong Kong ran Finger Motion. And if I had to guess, Finger Motion is about to be run out of Dorado Beach, and everybody will get crammed down. That's if I had to guess. Or it's just going to go the way of, any number of these names down to cellar boxed. Or they'll hire Mark Bazile and they'll win, and the stock will be effectively no bid. To give the middle finger motion to the board and put the key man clause. No, the lender did that. That's so that the lender can control what's coming next. But nobody wants to accept that these notes are built for what happens illegally in the shadows. They're just the facility that allows the shadows to steal the entire market caps of companies. But nobody, it's not proven, it's not in a study, it's not in a document. No attorney's going to look at it, no judge is going to look at it. The SEC doesn't care. Guys, it's not something we can fight. But I think there is a way to benefit. And I think NextTrip may have come up with a way to benefit. There's no way to benefit in the case of Finger Motion. And I think Railtown, without having taken any of this financing, I think Railtown is actually a setup because of the confidence that these desks of Shatid men, uh, uh, they just know they can just keep selling down. And I think we're going to benefit. We got to build a very nice position in Railtown. We have probably something like 24 million shares. I took Bill Miko out of that number, but it doesn't mean the number's accurate. But he's gone from it. Uh, but at roughly that number, which we wouldn't have been able to buy. Conceptually, we paid 10 to 12 million for that position. To do it without this corrupt system, we might have had to pay 24 million for it or more. So we're taking our advantage there. But no, I think Martin Shen signed it because he was told to. That's my opinion. And I think the key man clause was in there so that the uh, um, new owner of Finger Motion can control what's going to happen. And make no mistake of it, shareholders in Finger Motion are going to be wiped out. Justin Babish, the request double payment sounds like they can make a one-time request of the double payment, which is worth two payments. That's how they're reading it. That's how NextTrip is reading it, is that it's a one-time thing. Also, I was told by NextTrip, if that happens, for example, the company has a one-time election to move their payment, not make a payment for 1 month. So it's a little bit of protection against that, but then you have to make 3 payments the next month. So look, Justin, it's going to come down to 2 things with NextTrip. One, they've got these enormous deep pocket board members who can write a check. That's number one. Number 2, it's going to be revenues, real hard slamming revenues. And I think what the Frenchman doesn't pick up on is that the revenues are going to be, the exciting revenues are going to be the advertisements, not the bookings. Harbison, thanks for all the digging, Ward. But anyway, Justin, I think you read it correctly. I do think you read it correctly. It's one time, probably. Ward Richardson, Harbison, yes, this is great news for RT. They will gain a lot of exposure from this. I will have more info on this when William gets back from New York City, where the girls are pretty. Mike B5N4I, the Canadian Securities Exchange has eliminated the requirement for listed issuers to file a monthly progress report. Form 7, yay, yay, yay. But we have earnings coming up for Railtown probably this week. Mike B5N4I. The exchange officially repealed Form 7 and removed its filing rules from the CSE listing policies to reduce administrative burdens. Mike B5N4I, key details of the change effective. Mike B5N4I, key details of the effective date. It discontinued for July 26 reporting and all subsequent months. That's great news. Remember that guy that keep coming on to make us nervous about that? Harbison, NetZen, AI, newest AIP company. So they have 201. All right. Or let me see if I can finish up ah, on. Okay, so when I was talking to Ward earlier, I asked this uh, Afrikaner about this. I said, Sinchi, Railtown AI, Apollo IO, and Agent Force are all active players. What's going on in the fast moving agentic AI space? AI systems that don't just answer questions, but reason, act, and execute workflows autonomously across data, apps, and business processes. There's a direct link between Sinchi and Railtown. The others are parallel. And of course, they go on to explain Railtown builds end-to-end agent development platform, Railtrax, Rail Engine, Conductor. Um, for those that don't know it, Railtrax is an ADK, agent development kit, Python native framework for building resilient multi-step agents. Rail Engine is real-time event-based data ingestion engine so agents can act on live streams beyond batch. And then Conductor is observability, monitoring, and management for agents in production. So Railtown owns AIP Partners, now 201 companies. Sinchi is one of them, and it provides a real-time data network that lets teams, systems, and AI share and govern data without traditional integrations or silos. It emphasizes AI readiness, customer 360 views, ERP, CRUM, consolidation, and embedded governance. In late July 26, Sinchi joined the AI Partnerships Network. This expands access to Sinchi's Paramind suite, AI action governance, tools for observing, governing, and enforcing policy on AI behavior in real time as agents access data, apps, and take actions themselves. The goal is trusted production grade AI at scale rather than uncontrolled shadow AI. Railtown's Tom Core has publicly highlighted the partnership as strengthening the ecosystem for responsible AI adoption. In short, Railtown supplies the agent building observability stack plus the partner ecosystem. Sinchi supplies the governed data foundation that agents need to act safely. Apollo.io. Apollo.io is an AI native go to market sales intelligence platform. It has a large B2B contact database, 230 million plus contacts, enrichment, sequencing, outreach, and increasingly agentic workflows. Fully agentic end-to-end GTM platform, VI GTM, where users describe goals in natural language and agents handle prospecting, research, list building, personalization, sequences, and more. AI assistant, agentic engine that actually executes, not just suggests. Headlines, headless capabilities via API, CLI, MCP, so other AI tools and agents like ChatGPT and the Frenchman can call Apollo's data plus actions. Salesforce integration is standard and well supported. Um, Strong growth. Apollo is approaching 150 to 200 million in annual recurring revenue in recent reports. They have a new CEO in early 26, and they are positioning it themselves as the system of record plus action for modern revenue teams. It competes in and overlaps with parts of the sales side of Salesforce's ecosystem while also integrating with it. Agentforce, Salesforce. Agentforce is Salesforce's digital leader, uh, digital labor AI agent platform, and they launched it in 24 late with rapid iterations, including Agentforce 3 and Agentforce 360. It lets companies build, deploy, and govern autonomous agents that work across sales, service, marketing, commerce, and industry clouds, grounded in Salesforce data, Data 360, metadata, and business logic. Key themes: Atlas reasoning engine for planning and acting, like Meghan Markle. Low code agent builder, pre built industry actions, hundreds. Observability command center, MCP support for interoperability and headless capabilities, strong enterprise adoption metrics, billions in AI data ARR contributions, millions of agent interactions, high deflection rates in support use cases, positioning humans plus agents as the new workforce model, rapid releases and ecosystem agent exchange to speed production use. So, what's going on in the broader picture? We are in the agentic AI infrastructure wave. We are in the agentic AI infrastructure wave. Platforms for building and running agents, Railtown. Governed data layers so agents can safely act, Cinchi, Paramine. Domain-specific agentic systems for revenue, Apollo.io. Enterprise-scale digital labor platforms that sit on top of existing CRM and ERP systems, Salesforce/Agentforce. And Wilberforce. Cinchi plus Railtown is a concrete Canadian ecosystem partnership for trusted agentic AI. Apollo and Agentforce represent the high velocity commercial push in sales and broader enterprise network. All are racing to move AI from co-pilots/chat to production agents that own multi-step workflows with observability, governance, and real-time data. No single mega deal ties all four together right now, but they illustrate the same shift, if you catch my shift. Data plus reasoning plus action plus control, delivered as platforms rather than one off models. If you're tracking, okay, I'm not tracking anything, I'm just trying to go to bed. So I asked, what's going on with Railtown's trading today? I showed the computer this, and I told them that a kiss is just a kiss, and a sigh is just a sigh as time goes by. You must remember this. So early in the day, Railtown on Yahoo showed 100,000 shares, but look at that ask, 4.5 million shares for sale. That is a bunch of hogwash, and that's illegal. 4.5 million shares for sale at 27 cents? Are you kidding me? And then here at 334, the volume's 300 and, no, sorry, I can barely read that. 121,000, I think it says. But look at the volume on the ask. 515,000 shares. Nobody is selling that much stock. I think somebody's trapped. And there, at the end of the day, 354, the volume is 180,000 shares. And it's still that 4,515,000 shares for sale at 27.86. That is not real. It's not real. It's not real. It's not real. So I asked about it, and the answer came back. Here. I only showed two of the screenshots. The ask size is enormous, while the bid size is 250K. That's a massive imbalance that looks like heavy supply. Yet, price still closed green, up 4% on the day. Volume ramped from 76,000 midday to 181,000 by the close, well above the 119,000 average. The stock held higher. This is Railtown. Held the higher levels after the morning dip and didn't get pushed back down hard. In low float, low liquidity, over-the-counter names like Railtown, this pattern often shows up when market makers, so-called algos, park large size on the offer to create the appearance of resistance. That is illegal. Someone is actually absorbing the real selling, and the big asks are being pulled or refreshed rather than filled. BS. There's quiet accumulation happening underneath the visible wall. That's my bet. Whether it's deliberate spoofing, of course it is, layering, or is just typical OTC quote behavior. What's typical? It's all criminal. It's hard to prove from the surface. That's true. It's hard to prove. But the price action plus volume finishing higher, it does line up that buying interest is present. My read. No catalyst hit today, and I warned you of that. When the stock turns, we're probably not going to know why. Thin OTC books can flip quickly either way once size actually starts trading or the wall disappears. It's worth watching how the ask size behaves tomorrow and whether volume continues to expand on any further strength. Yes, it will be worth watching, and I think that it'll continue. So here's a snapshot. Look at the ask size, 4,305,000, 4,515,000. It's a bunch of malarkey. Extreme size imbalance. Ask size was 18 times the bid size throughout the day. This creates a visually intimidating wall of supply on the offer. It's all a lie. It's all a lie. But no one cares. No one bloody cares. Price action diverged from the book. Despite the massive visible ask, the stock opened higher, it held the gains, and it closed near the day's high. Volume expanded into the close rather than drying up. I think there's a buyer. I mean, obviously. The tight spread persisted all day. Even with the huge ask size, the best bid ask stayed very tight. which is unusual for pure aggressive selling pressure in a microcap. This is fake sales. Those aren't real. Recurring pattern. Large persistent ask sizes have appeared on Railtown's L1 quotes for extended periods. Well, they were 50, 100, not 4.5 million. They refresh rather than get fully filled. They never get filled. Everyone tries to be gentlemen and not point out there's a bunch of thieves out there. So the interpretation of the dynamics, it's just thin over-the-counter market behavior. Low liquidity OTC QB names like Railtown, 60 million market cap, average volume under 150,000. Market makers, there are no such things, routinely post large size baloney on one or both sides to provide two-sided quotes and manage inventory. Bull, 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 bull. The displayed 4+ million shares ask is only a tiny fraction of the 218 million shares outstanding, and frequently asks as a quote rather than firm immediate sell interest. It's all illegal and it's all wrong. When the price holds or rises through it, as it did today, it suggests the size is not aggressive real selling. It is not real selling. Man, they have to be so careful with what they say. To support evidence for underlying demand for the stock, the volume finished well above average and the price closed near the highs. Buyers were willing to trade through or around the visible offer. The Canadian primary listing shows more balanced depth when available. Oh, it's all lies. Large orders that appear and then cancel as price approaches are the classic spoofing pattern. Without time-stamped level 2 plus cancellation data, it's impossible to confirm. It's impossible to tell a baby not to cry. It's just impossible. The appearance or the persistence of similar large asks over many sessions, combined with the stock not collapsing, argues for more routine market making quoting. It's so routine than a one-day manipulative wall. It is the whole thing. I'm tired of arguing about it. Spoofing remains a risk. Oh, does it? But price action today did not reward a pure scare away the buyer strategy. What it does not show is hitting iceberg size dark pool. Of course, none of that. None of that bloody information is available. Watch whether the large ask gets reduced or pulled in subsequent sessions. Compare it to rail in Canada. Volume and price confirmation matters more than their spoofing. The spread and the quote quality stayed tight. So they say it's consistent with market maker presence. I think it's consistent with buying demand. The order book currently displays heavy visible supply. It's not real, but the price and volume on August 24 treated it as soft rather than hard resistance. This is typical thin OTC dynamics where displayed size can overstate actual selling pressure. The book is noisy and it's fraudulent. The tape, price plus volume, is the clearer signal right now. Your mama is a clearer signal. and I'm totally lost. So I might quit because I'm lost. I'm going to see if I can find myself. It's not real. It's not real. It's not real. Baby. I have no idea where I am. Yeah, I'm way lost. I think I'm gonna end it there because it's 10:30 and I gotta go to sleep. Um, I'll see if there's any comment. Ward Richardson, Harbison, great find. Of course, an inquiring mind had to look into this company. Another highly disrupted stack here, everyone. All right, so my takeaway from this next trip bit we did just now, I was obviously confused with what I was reading. Um, and I did have some more to say about next trip, but I can't find where I am. So I'll save that for tomorrow. But there is a clear way they can just pay without any stock being issued. But if I had any advice that matters, I would get the heck out of that note as soon as possible. But I don't think they have to have a successful company. They just have to be very careful about the default items. And I think you're going to see with Next Trip, even though the Frenchman didn't get it, I think you're going to see that there's revenue from advertisements that could come in at scale. And it's going to make the whole issue mute. Um, um, and I think that's the setup. I really do. But we'll have an interview in Wednesday afternoon or Thursday afternoon, and I'm sure we're going to hear good things on Nexter. Railtown, I think the stock action Friday, as I alerted to you to, it wasn't hard. That was a great close, and I said Monday it's going to be up. Wasn't hard to call, but I think we've seen our turnaround in it. I think somebody's buying. Obviously, somebody's buying, but I think it's an institution or a knowledgeable, well-heeled investor, and I think it's saying something. So, like I said, it could be there's a contract that's about to be announced, or some sort of thing like that. It could be an institution is buying, or it could be just momentum players, but it doesn't look like that. Look, I think when they put 4 million shares on the ask, number one, they're talking to each other. And number two, they're trying to they're trying to suppress any kind of meme-ish buying. I don't think it's going to work. And I think it's a sign that there's some pressure, bubble, toil and pressure under it. And I think that's all I wanted to say. I was going to go over Jim Rickards. He thinks AI is the biggest stock price bubble in history. He's talking about an 80% decline in the NASDAQ. Remember, I said 90 or 95%, something like that. Or did I say 85%? Doesn't matter. It's all the same number. NVIDIA Money Loop. He's pretty negative on AI, but I don't know which AI he's talking about. He's talking about externalities. You'll have to go to Tony to find out what that means. We'll go over that. I'll bring it with me. We can go over it in New York. I'll bring it with me if I remember to bring it with me. Here you go. This is my argument. Unlike tokens, algorithms, or software, energy cannot be conjured into existence without another funding, with another funding round. Energy is the place to be. So Chevron, the long arc of I love Chevron, CVX. I've loved that since I was your age. The Permian Basin, where AI meets energy. The Permian is Texas. Texas oil meets AI. Guyana. I didn't know Chevron was in Guyana. That's huge. So his top 5 buys, Chevron. I like that. Patterson UTI, I like that. Nove Inc. Drilling Systems. I don't know why I don't know that one. It's good. Persian Gulf. Alamis Gold, I love. Diamondback Energy, also great. Natural gas selling for $3. Here, but in Europe, $16. All right, I'll bring that with me and we'll talk about it. We can talk about Paul Bluestein's book too. Pretty good book, actually. But I've only read 2 or 3 chapters. All right, I'm going to say goodnight. Thanks to everybody for tuning in. I'm sorry I got confused in the monthly versus the repayment, but hey, I wasn't intentionally trying to be confused, but I guess I was. And we'll catch you on the flip side.